Oh my gosh, I was recording for an hour and then well, I guess I wasn't recording for an hour. I thought I was recording, but I wasn't. But anyway, this is a lecture at Columbia Business School, one of the best prestigious business schools in America, and one of the few business schools that offers, the Ben Graham class, which is kind of like the value investing class. And they had this guy Leilu, and what I was saying before is, you got you had Ben Graham and Warren Buffett. Met Ben Graham and worked for him, and then he did Berkshire Hathaway, all that stuff. And one of Buffett's right hand guys is Charlie Munger, who's very old now. But Charlie Munger's portfolio, and I'm not sure if it's changed much, but basically, I think a third of his money is in Berkshire Hathaway. The other third is in this guy Leilu, who kind of like the quote quote Chinese Warren Buffett, founder and chairman of Himalayan Capital. Um, and up here it says one of the best value investors of all time. Um, in this video, he mentions Bruce Greenwald, who I think is who I've learned the most from as far as value investing. Um, but back to Charlie Munger's portfolio. Basically, a third is in Berkshire Hathaway. He's got a third in Leilu, and then he has like Costco, Bank of America, and Wells Fargo basically as the other third. So that's basically his portfolio. 33% in Berkshire Hathaway, 33% in Leilu, 33% split up between Costco, Bank of America, and Wells Fargo. But anyway, and and I liked and subscribed to this guy. But anyway, in this video, I watched maybe up to 58 minutes or so. But the first half, he's talking about Timberlands. That's a shoe. And the owner basically owned 40% of the company, but he had 100% or 98% of the voting rights. And it was trading below book value. The only negative was there was a bunch of lawsuits, but the lawsuits were kind of frivolous. They were lawsuits based on the owner would not provide any Ford guidance anymore. So it was kind of a bullshit reason. And around this time, I want to say it was probably 86 to 92, somewhere around there. But another big trend for me, as I remember looking back around that time frame, is gangster rap really had not got started yet. I mean, it had always been around, but probably around 96, 95, somewhere in there, it became very popular among white kids and suburban Americans. And that's one reason Snoop Dogg and Dr. Dre and Tupac and Biggie and all them really took off, because you had this African Americans are always usually about 10% of the population, but you had a lot of white kids that were interested in, and a lot of people, when they're trying to look a little tougher, they would wear the Timberlands, and they were very popular. Very popular. I remember they were very popular, and everyone wanted some Timberlands, but anyway, he made a lot of money off of Timberlands. And then the second company, he didn't say what the name of it was, but the second company, the book value basically was $60 million. You could buy the whole company for $60 million. I want to say they had no debt. They were making $30 million in profits every year, so it was basically trading at 2 times earnings. The assets were probably conservatively $320 million. You could buy the whole company for $60. They had $70 million in cash. The assets were probably $320. And actually, they were probably higher than that, because the real estate he thought was 2 to 4 times higher than what the book value of the real estate was. And not only that, they had, I don't know, a 13% ownership in a company that had a $300 million market cap. They had all kinds of other investments as well. But anyway, the company ended up going 5 to 7 times up in value. So I mean, these are real cases. These are real companies. These are real. Now looking back a couple years, we can see how it played out and what happened. But in the Timberlands case, I think they were continuing to grow their earnings 30% a year. It went up, I don't know, 5 or 6 times. I forgot what he said, but value investing. Oh, another thing he was talking about is 95% of the people, the market is, they're day traders, they're people that look at graphs and charts, and they're not really looking at the value of the company. They're not really looking at it as a business owner. And this is 95% of the market. So, I mean, to be a value investor, you are truly a minority. You are 5% of the market. You have to be comfortable thinking everyone else is wrong and you're the only one right, and nobody else agrees with you. And you got to be confident that when the stock goes down, that you're confident and buy some more, and then if it goes down some more, maybe you buy some more after that. But after that, if it goes down, maybe you're wrong, and you got to get out or just don't invest anymore and see what happens. But yeah, I don't want to play the whole video again because I just watched it for an hour. But you can type in the Google Lei Lu best lecture ever for stock market investors, value investing, to check out this video if you're interested. But I find it very and he just talks about you got to learn a lot. You just got to constantly be learning. You got to constantly be curious, and but yeah, this is the cigar butt approach. That Buffett talked about, and it just happened that Timberland is actually a really good company as well. So I mean, you could just have held it forever. But anyway, guys, I hope you guys, if you have some time, maybe check out this video and hopefully you learn something from one of the best value investors there is. All right, thank you.